moving away off the 2D plane paradigm of computing into more, integrated, dynamic, serendipitous spatial form of computing. I think this is maybe perhaps a bit of the early crown jewel, and that I think really underscores the fact that we're here now, and this is unequivocally the future. Technology is not a product. And ultimately, as a company, your job is to develop a product, right? And I think this is, for example, AI, I think has been this has been a very pervasive problem, where just because you can build a model doesn't mean that you solve somebody's technology, right? Like everybody has kind of like the superhuman iRobot, dystopian fear of the world to some extent. I personally also don't deny that, right? Like I'm the first person to say that I do think that the more advanced technology gets, the more human-like technology gets, the easier it will be to abuse it. A lot of times an investor might pass on you, not because, they theoretically are unwilling to take the risk that you're presenting them, but they're unwilling to take the risk in trade-off with the upside that they might get.
Thank you so much to Dula for being the early backer of the podcast. For entrepreneurs and founders just starting out, forming a US LLC, a bank account, managing taxes, compliance can be a daunting task. If you're a non-US resident or a first-time founder who lacks the experience, knowledge to navigate the complex legal and financial landscape, it will be impossible for you to do all this. Dula is an all-in-one platform that simplifies the process of forming a US LLC, setting up a US bank account, and handling taxes, compliance for startups and businesses all over the world. Dula's mission is to democratize access to the US market and empower entrepreneurs to focus on building their businesses without getting bogged down by bureaucracy. If you're building a company, there's no better option out there than Dula.com.
Hey Arian, how are you? Hope you're doing well.
I am fantastic. I have my new face computer, the day we've all been waiting for. So I'm thrilled. It's like a great day to do this.
So do you think that this kicks off the augmentative era?
Oh, I mean, I think it already started, right? To use my term, right? This trend of moving away off the 2D plane paradigm of computing into more, integrated, dynamic, serendipitous spatial form of computing. I think this is maybe perhaps a bit of the early crown jewel, and that I think really underscores the fact that we're here now, and this is unequivocally the future. But it's been happening. I mean, there's a reason I got interested both as an engineer and then obviously parallel later to that as an investor. Is I think it's just very obvious that that's happening. And again, like I said, the VR ecosystem has been doing very well for a long time, right? For a few years. It's not a novel thing. So this has been happening. It's just a lot of people haven't paid attention. Roblox, right? Fortnite. Again, you see that most in younger generations, where it's really obvious that this generation is growing up in a more kind of spatial and integrated way of computing in the first place. They're the ones obviously going to push the future, right? Not boomers, right? For all intents and purposes. So that's already been going on. But I think in the last 6 months, or last year, depending on where you want to start, it's become very obvious, right? I mean, we can take a bunch of different approaches here, right? And like these are things, for example, we're focusing on with the fund. On the AI side, where obviously all of this really kind of started in critical acclaim, I should say, is, you started to have technology that acts human-like, right? And, that was obviously the first big aha moment with like ChatGPT for a lot of people. And you look at where that's kind of expanding to now, about a year later, we're talking about multimodality, right? And it can sort of infer things from pictures, right? And it's like, what does that tell you, right? We're going from more just text to something that's more natural, right? That's more integrated to our environment. Very much like augmentative, right? Like augmentative to our surroundings. And so where do you think that's going, right? So we can kind of go one path and say, okay, like one thing that I'm very bullish on, and I want to do a lot of the fund this year is consumer robotics, for example. Because, obviously kind of tangential to that, off-the-shelf parts for robotics have gotten cheap. And, so this was an industry that was actually traditionally very capex expensive, is not really the case anymore. You have that, but now also like, you have all through all these LLMs and all this technology, you actually have AI, you can kind of at cheap-ish cost, or at least development cost, put into these machines that they can actually interface with people in a very natural way, right? And like that wasn't possible 2 years ago. So you can go build all this kind of consumer robotics now. That's really exciting, right? What are consumer robotics, right? It's computing that integrates and kind of interfaces with the actual physical environment, right? Augmentative. On the flip side, I think you're looking at it from the human perspective, interfacing digitally with its surrounding, right? So VR is one approach to that. And of course, it's doing it from a very vision-based perspective, right? About like, we're augmenting vision, right? And we're trying to integrate touch and other kind of senses into it to some extent, right? But that's really the crux of it, vision part. But even look at like the humane AI pin or like the tag or rabbit or these sorts of things. They're taking a different approach from it, right? They're calling it AI wearables. But I'm like, to me, like VR headsets and all these devices are actually in the same category, things that just, augment us as humans, right? In computing with our surroundings, right? Like look at the humane pin, right? Okay, you don't have the screen you're talking to. Right? It's like, you're talking to the, again, by the way, I don't think that this device's first edition will work. I can kind of talk about why I think that, but the premise of it is we have additional sensors now where we can kind of perceive things and you can interact with them, right? So it's more perceptive, right? Because like take the AI pen, all of a sudden you have a camera now that theoretically is always pointing at what you're more or less looking at as the human, right? So like your phone can't do that, right? Your phone is either in your pocket or it's facing down or whatever, right? Like it's not going to have the same vision that you do. Like I think the premise of the AI pin is that it has that perception like you do, and you can interface with that, right? And so for example, you can tell it, what am I looking at, right? That's kind of a new way of computing, right? You're not using a screen or Googling something anymore, but it's more like, I'm looking at a restaurant, pull up the menu for the restaurant. Now, I think that's an aspirational application. I think part of why, that's, for example, why I'm bullish on stuff like AR glasses at some point kind of very distantly in the future. But also why I'm kind of bearish on like the current editions of the AI pins and stuff, because I'm like, it's not fully there yet. But again, all of that shows is that we're unequivocally moving into a computing paradigm that's more integrated.
Different companies are trying different things. What do you think? What factor really decides who wins?
I mean, the market will say, right? I think that's kind of the simple answer. My personal theory is, again, a part of the reason why I don't think that, like, take the humane AI, like, it's going to be a bit of my I like to kind of pile on it because I think it's, I can appreciate the aspiration, but I think some of the execution there is a little bit. I'm not in love with it. Let's put it that way. But like, what's the problem with the humane pin, right? It's like it doesn't go all the way. Like the only way they pitch the device effectively is it's like kind of a phone replacement without a permanent screen that maybe has better Siri, right? And so the argument would be like, if I look at the AI pin, with what the functionality that they currently have, or at least that they pitched, right, on our own one. So I haven't tried stress testing it, but at least from what I've been able to gather, if you put like a Chat GPT powered Siri into your iPhone, is there any reason for the humane AI pin to exist as it's presently being sold? Probably not, right? Because that's really the only functionality that they sold. Now, again, it goes back to the point. I think the problem with them is that, they didn't go all the way. And I don't know, maybe that's because they had pressure to ship quickly because they raised all this venture money and they've been toiling around it forever. I don't know. But, like not using that camera effectively, right? Like, I think it would be really interesting if you could actually get this device to use the example that I used earlier, right? To say, I'm walking around with my pin, right? My pin is looking at some restaurant that I'm thinking about eating out on vacation somewhere. And I could tell it, hey, AI pin, tell me about this restaurant. What are the ratings? What's the menu, right? And it pulls up all the information for it, gives it back to you. That will be powerful, right? Because, and I think you could argue you can do that through your phone too, but like, it's a lot nicer to do that without actually looking at the screen, right? I think that's part of what the play is. I don't think that direction as this kind of all-day wear device is going to work until you really leverage the fact like that you have that kind of permanent access to computer vision that's approximate to your eyes. So I don't think that's necessarily going to work. And on the flip side, again, I think VR headsets have sold, right? Like they have more and more of them every year. And so in many ways it is, I don't want to call it de-risked by any stretch of the imagination, but it's been able to continue to grow. And like, I think Apple's only going to really continue to contribute to that. So I think that form factor at this stage where we are, in technical development and technical limitations is probably the best way to approach, the augmentative era of computing, I guess you might put it that way. Basically able to 10x like existing processes. And so I think and I think this is like generally true, like not even just for the actual hardware and stuff like kind of at the Vision Pro level, but I think even going downwards, like, if I'm looking at a VR app and, the question I would always ask is like, is this enabling something that wasn't possible before? Or is this 10xing something that was previously technically limited by being 2D or whatever? And if the answer is no, it's not valuable, right? If the answer is yes, it's like, I think you're onto something. And so I think that's largely what the driving force is going to be, right? It's just you're able to 10x or just do new stuff.
The development of new technology has been happening for a while now, and I mean, things have come up in the past that could 10x the whole experience or make things better. Why do you think has it taken us such a long time to build something which people are debating about as replacing our current standard phones or computers?
This is really difficult technology to get right, because it's like the only reason we're used to these 2D screens, right, and all these 2D planes and stuff, the only reason this exists is because we had technical limitation, right? I'm sure if you gave the earliest pioneers of computing the opportunity that you can do whatever process it is that you want, but there's no limitation given through 3D and 2D. I personally don't think that everything would have ended up like the way it is right now. It's like, we're effectively just working within the parameters of the parameters of technical limitations, right?
You talked about technical limitations there. What do you think really sets the technical limitations for a certain era?
They're trying, right? It's hard. I don't think I have a particularly great answer other than you're effectively constrained by the laws of physics to some extent, right? And so you basically try to find the best solutions within those, and that's difficult. And so I think we've done pretty well. We've come from scraping into rocks to now having a computer on our face that lets us like digitally augment things that we see. It's pretty amazing, right? So, we're gonna have like robots walking around in our houses. I'm sure in the next 5-10 years at latest. It all moves quite quickly, right? But I think everything is a step function. I think that's kind of the important thing to realize. People are basically figuring out how to do more extreme things within the laws of physics all the time, right? And as soon as somebody finds it, is when you kind of have that step up, right? So it's hard. I commend people that do it. Like I was never really at that kind of low level innovation. I was always like, okay, I'm the one that's building stuff on this, right? But not actually kind of with it. So I commend the people to do it for sure. I mean, those are like the real heroes, if you will.
That's an incredible part. I think I'll pick you on the last part there. If you look at it from, you and most of the people that are like early believers in the whole augmentative era, quote unquote, you have a different point of view from which you are viewing this thing or this technology. If you talk about the general consumer, how fast or how far do you think does their comprehension really limit them?
That's a very good and interesting question. Let me put it this way. I think like my viewpoint has always been that with technology, to some extent, like if you can imagine it, at some point it will happen, and you probably shouldn't bet against it happening in some form, right? Like it will just kind of move forward, right? And so I felt that way with AI, right? Because I first kind of really stumbled upon it in like 2014, 15-ish. I've been doing it kind of really professionally since then, but where it was stuff was very primitive at the time, right? And you didn't have all this like PyTorch, all these GPUs and stuff. And basically, you're maybe running some like Python libraries if you're lucky, maybe even some C code on your CPU. And if it doesn't train and you crash your CPU, shit out of luck, right? That's kind of how it was back then. But you could still, I always had this mentality like, you can see where this is going to go, right? Because technology just gets better over time, right? Like people push it forward all the time. So I think if you can start seeing the semblance of something working, like I had the same thing when I tried VR for the first time, where I'm like, sure, it's rough, it's not all the way there, but you can see the kernel of what this is doing, and you can kind of count on the fact that people are just going to make it better, right? Then years later, you end up at the Vision Pro, which is categorically that, right? Just significantly better version of whatever it was I tried back then. So that's just my mentality, right? I have this very kind of like technology will just continue to get better. So if you can imagine it, there's a very good chance it's going to become real. I just think most people don't have that kind of, I guess, conviction about the development of technology. Why I can't tell you, it could be a lot of things. It could be, it's just maybe too sci-fi for some people, right? Of course, there's always this kind of 1984 paradigm to things where, too advanced technology is bad, right? So we don't want it to exist. And like, that's particularly what I say about VR all the time, is I think that there are a lot of people that ignore some of the realities of that this is actually working because they don't want it to exist, not because they deny necessarily factually that it's not growing and that it's not taking over. They just don't want it because they have some sort of dystopian perception of what a VR future would look like. And I think that's true for a lot of advanced technology, right? Like everybody has kind of like the superhuman iRobot, dystopian fear of the world to some extent. I personally also don't deny that, right? Like I'm the first person to say that I do think that the more advanced technology gets and the more human-like technology gets, the easier it will be to abuse it. And let's put it this way, not just the easier it gets to abuse it, but the bigger the impact of abusing it is, right? There's a very big difference between using AI to create some, crazy virus, right? Just to basically do bioterrorism than it is to send Trojan horses around emails, right? It's a very, very different level of impact in society, obviously. But also that's why I do what I do, right? And my impression is that technology will get better. That's a reality. For better or for worse, it will continue to evolve. I think a lot of the thought of technology is, of course, in nature can be used for very good outcomes. But it also has risks, right, if it gets abused. And so partially some of my thinking is, why I always wanted to invest was, if you invest early, you can sort of help dictate some of the direction there, right, and catalyze some of the direction. And so, that's kind of, and to some extent, when I see my part, it's like, I have turned down deals before because I felt that it was a kind of dystopian use of technology. I've done it, right, so it's, I do have some kind of sensitivity there, but I think most people just don't want to deal with it, right? They're like, I like how things are. I don't want it to change. So they kind of, I guess denies, I don't know if that's the right word, but like don't believe in some of the progress of technology to some extent because they don't want it to exist is perhaps, or they have fear of it is perhaps because I mean, they fear about it all the time, right? Oh, they're going to take jobs. Oh, you're going to be disconnected. Like, so there's a lot of like very, approachable narrative about the downsides of all this technical progress that I think a lot of people take to heart. Again, I don't know if that's generic, but I definitely think that's true for a lot of people, right? I have a lot of friends, obviously, that are not in the tech industry that have the sorts of perceptions on technologies that are coming, right? And so that's just something I sort of like, I can only contrast it to my own kind of view of the world.
When you really assess new technology, even though you do maintain this equilibrium between pessimism and optimism, when assessing looking at it from the pessimistic point of view, how wrong do you think should you assess? Do you assess it? How wrong can things really go?
I don't know, but I don't want to find out. Let's put it that way. I'd rather not find out because, I mean, like people ask me, I've gotten this question before about like how I think the world is going to end. And like, if you ask me today, like my personal biggest fear is there's going to be some dude that abuses AI, right? Because one of the things that's really kind of, I'm hearing a lot more and more about and seeing more is kind of AI and biotech, right? And so a lot of people are leveraging a lot of these AI innovations to create new organisms and all these sorts of things, right? To just do it quicker and just speed it up and it's more effective. That, of course, is great, right? So if you could use these things, that again, goes the same paradigm, right? Like to go create like better medications and drugs and stuff for certain illnesses and all that, that's fantastic, right? That you can leverage to just do it quicker and more effectively and more powerfully. On the flip side, someone might say, hey, let me engineer an organism that's as contagious as COVID, but as deadly as Ebola because I'm suicidal or I'm terrorist group or whatever. Create it and then distribute that, right? How screwed the planet is. And we saw from COVID, which all things considered was a pretty benign virus, all things considered, given how prevalent it was. Imagine you had that, but it was as deadly as Ebola. Right? Literally, it would be the end of humanity. So the fact that you have technology like that at some point could fall into bad actors or rogue actors' hands, to me is very, very scary. And so I think threats like that do need to be taken or considered seriously, right? Because it's not just one of those things you kick the can down the road on, because it's one of those things where it's not like a lot of previous mishaps that we've had with technology, right? Where things go wrong with privacy or whatever, viruses, where it's yeah, it sucks, but you can, it's a fixable problem and you can kind of retroactively figure out how to deal with it. I mean, some of these things could really be existential, right? Because if something like that happens and we're all dead as a species, there's no opportunity to fix it, right? Because humanity is done for, right? So, yes, I definitely have some concerns about that. I'm not going to sit there and deny that. So that's kind of why I'm saying I don't want to find out what the downside is, because the downside is objectively, in my opinion, Armageddon. Well, the tools to make that happen will only increase as technology becomes powerful, and I don't want to find out what that looks like. So, I guess that probably answers your question. But yeah, the downside I think is very bad. Can be very bad.
Yeah, we talked about the development and the technology side of things, of the augmentative era, the technology behind it. So if we pivot a little bit from AR and VR specifically, what role do you think will artificial intelligence play in that, AI play?
I mean, I always say that I think AI is the glue to make a lot of these things work.
If AI is connecting AR and VR together, where did the line between them really differentiate? What differentiates VR from?
I think it's a good question, which is why I really much use this term convergence, right? Because I think in the long run, what discipline ends or what discipline could kind of exist independently of the other, I think becomes more difficult to delineate. I think today it's a little bit more obvious, right? Because you might use AI building blocks or AI tools to build actual spatial experiences. The act of building that spatial experience, for example, would still be what we call VR and AR and all these sorts of things, depending on how it's used. And AI might be a building block for it, right? But it's still, kind of first and foremost an AR or VR product. I think that line is dissolving also. And, I think that one trend that's really been pervasive over the last few months, at least in technology that's been released publicly, that underscores that are these quote unquote what people now call AI wearables. Which I personally think is a bit of a ridiculous name, but you have these AI wearables that they kind of juxtaposed to the AR VR headsets, where my argument would actually be that, even a VR headset or any sort of pass-through does not work without AI building blocks, right? I mean, surely just the semantic segmentation of your room and your environment physically is AI that's completely, that an AR or, pass-through MR, whatever you want to call it, headset is completely dependent on. So I wouldn't actually classify these as being different. The end goal of all of these things is effectively to remove your screen, right? And to let you compute more naturally within the context of your environment. All these devices, be it the Humane AI pin to the Vision Pro to the Quest 3, those are all of their long-term objectives, right? Is to get rid of that screen. I would principally classify all of these as the same category of devices I've said. And so because of that, it's as that pushed forward, I think the delineation between what is VR, what is AR, what is, AI wearable, quote unquote, it's just going to get, more and more unclear. It's just going to converge more.
So if you put all these into the same bucket, you put AI wearables, AR, VR, if something else pops up in the future, why is AR, VR, why do you think that AR, VR is the right technology to remove the screens that we have?
Well, one thing I always say is I'm more interested, and I say this too, this is also something that I say to companies all the time, right? I'm more interested in the problem space that we're trying to solve for, or that I should say that the ends we're trying to solve for, the means, right? And so the ends is a lot of what I've talked about so far, right? This sort of dissolution experience, right? Like this sort of more, this extensive computing experience, this augmentative computing experience that enriches that basically is more conducive to an enriched perception of the world using computing that we currently have. That's the ends. And so what I think also that last bit I just talked about, hey, how all these different devices are actually related is a very clear example of there are different means to try to solve for that problem. And I think part of what, I believe in is not like, let's fall in love with the means of things, but in the ends of things, right? And so at this point in time, do I think that the AR VR route is probably the most promising in terms of really being that big lift in terms of propelling us to that computing future? Yes. That doesn't necessarily mean that I think that might be true in 5 years. Things I think are subject to change, and there really might be somebody that comes with a concept that's just better. And so that's entirely true, and that's something that I'm very receptive to. I just think that as we're sitting here, my assumption is that some of the tenets that AR and VR are hitting are more likely to be the building blocks of this kind of future experience, but surely because it's based, of course, on visual perception, which in that case, in this context, is probably the most important sense that we have as a human. However, again, completely receptive to the idea that somebody might come and present a much better alternative. But we'll cross that bridge when we get there. So we're sitting here right now, I just think it's the best.
So with that being said, how should extremely long-term companies right now, if we talk about building for the augmentative era, how should they?
Yeah. I mean, it's a good question because I think there are multiple layers of answers to this, right? And I think the one way that, for me as a VC, I can talk about it as the perspective of if you want to build a venture-backed company, right? At the beginning, that's important because I always say that, there aren't, from a founder's perspective, there are multiple ways to be successful, right? You don't have to be a big multi-billion-dollar venture-backed company to be a success as a founder, right? You can easily bootstrap something. You could do something much more short-term, etc., and do very well. So, but if we're putting this in the context of we're building a venture-backed company, right? That's supposed to drive a certain amount of value, call it over 10 to 15-year time horizon for which is just normal venture trajectory, let's call it. There are plenty of companies that from a lot of visionaries that pop up in the space are just too early. And so I've seen a number of companies that were probably, 3, 4, 5 years too early for what they were trying to do, that I am certain somebody in 10 years will be making money doing. So it's not really an idea problem, but it's a timing problem, right? And so the thing that I always caution with founders is that, you have to be very practical with, if you're going to commit to a venture trajectory, realities you have to take into account. When you raise venture capital for the right? So of course you can always bootstrap something and then, 4 years later, try to raise venture for it and go on that growth trajectory. If you give a compelling reason to, but you can't go back, right? It's like, you're putting yourself in a very, very difficult position if you're trying to raise venture capital and then, kind of go on the bootstrap timeline. It usually doesn't work. So it's something you need to be very aware of. And so the timing piece is important. And so I think the reality is that, let's say you want to start a venture-backed thing today, you have to look at it in a very finite sense. One of the complaints that I get now is, I've been pretty big on, the Vision Pro coming out, where I'm like, hey, I'm not sure if your goal is to build exclusively for the Vision Pro and raise money for, let's say, today. That you're setting yourself up to be on that trajectory, right? The Vision Pro is likely going to have a very small install base foreseeably. They're saying they're going to ship less than 1 million units. How many less, we don't know. But, in any case, you need to take the upper end of that. It's a really, really small install base. We don't know when there are more coming or how many more are coming. A lot of things we don't understand yet. The app ecosystem is very underdeveloped. for a venture-backed company, it's very difficult to just fully lead into that right now without kind of like a secondary market that you're hitting. Call it either the Quest, which is significantly larger in terms of TAM, and people are making a lot of money in it. So that growth trajectory is there for you to kind of get to that Series A already, and then with the market expected growth, you'll probably be okay even going into like more growth stage, at least based on what a lot of us believe. Might not be entirely true for just the Vision Pro right now. But the other thing is just, is the consumer behavior that you're expecting, even if the platforms are out the problem, something that generates value today and something that consumers understand today, which is de-risking. A lot of companies I've seen, I think, have died on that premise. That's, again, it's not that even I've seen, for example, interesting concepts around using computer vision for smartphones, which of course is a platform that has a lot of TAM, right? So that's not the issue. But the product was so advanced that I think it was too many steps too far for just consumers to adopt, right? And so that's the other side of it. So I think like what you really need to do is to try to find validation as quickly as possible, market validation that the people that want to use what you're doing very, very early. And so I think some of the trend that I've seen shift, for example, in the VR space, is a lot less time early on along development cycles, but a lot more focus on, we have a concept, we could probably put it together pretty quickly. Let's just put it out there and see if there's positive reception to what we're trying to do. And if there are legs, that's kind of when you keep going.
So many places to go from there, but I think will pivot to not really pivot to, but go on a tangential way to timing. I think I've seen a lot of cool things built in the past too that were just too early for their time. How should founders differentiate between finding the correct timing for the product versus for the technology?
Well, I mean, I think the important thing to realize, and this is something I emphasize as well, is that technology is not a product. And ultimately, as a company, your job is to develop a product, right? And I think this is, for example, AI, I think has been this has been a very pervasive problem, where just because you can build a model doesn't mean that you solve somebody's problem, right? Ultimately, your business is to solve somebody's problem. So AI might be means to solve that problem, right? Actually enable new means and new kinds of problem spaces that can't be solved. But ultimately, for you as a business, your job is to solve somebody's problem. And I think one of the things that's obfuscated that line a little bit is that with ChatGPT and DALL-E and some of these things that OpenAI has done previously, it's blurred the line between what has conventionally been AI research, where in AI research labs, so not just OpenAI, take like DeepMind, take FAIR, like Meta AI research, which is I think always underappreciated, where their job is really just come up with new algorithmic developments and proofs of concepts, right? That you can use new architectures to more effectively solve new problems. So typically they did that. That's kind of where their output. The outputs of those research labs was always papers, right? Like their success was measured in papers. Typically, the dynamic then was companies would take that research and implement it into specific problem spaces that they built products around. And so that I think is the important thing to realize, is that and the same thing is true for VR, right? The same thing is true for robotics. Like in the end of the day, I think as a startup, for the most part, your job, as particularly if you're building consumer products, it's also true for B2B, of course, actually, is like, hey, I am solving a specific pain point or a problem that either now with these means I can solve in a better way, or just solve an entirely new problem entirely that wasn't solvable before these means, right? And so this goes back a lot to what I said before about fall in love with the problem space, not the means, because there might be different means to solve the same problem. And so just falling in love with like, I could do this with AI. And so now I need to build a company around this thing that I can do with AI. It can work, but it doesn't always work. I think a lot more productive is there's this problem and now I can use AI to solve it, right? That might be one way, but perhaps you try something, you're like, actually, no, maybe there's a better way to do it. One example always, like I have one of my, better performing angel companies right now in this space. They started more with an AR lens to their problem space, and felt that might have been the right thing. Then realized actually when DALL-E 2 came out, oh, actually using using text to image might be a better means to start to solve this problem than what we were doing with like photo scanning and all these sorts of things. And that's ultimately what solved their problem, right? And so they made the big decision to kind of fall out of love with the means or replace the means that they built the company on originally, move to something better. And now their business is doing way better than it was before. And so that I think is the important thing, because they fell in love more with the problem space they're trying to solve than the means that they were trying to use to solve that problem. And I think that's something that I consistently see is quite important to have some flexibility there. So it's the technology is always just a means for the problem, not the other way around.
What do you think is Humane trying to do? Correct me if I'm wrong, but I think they started developing before ChatGPT was released to public.
Oh, for sure. Yeah. I mean, I definitely knew, because I got asked to participate as an angel in one of their rounds, way before ChatGPT for sure, but I think sometime in early 2022, if I don't remember. So, that was not their first round of fundraising either, though. At least, I think at least third one, third, second or third one, I don't remember. But in any case, they've been around for a little while. But it goes to show, right? Because like ChatGPT, frankly, is a very easy technology to just slap onto something. To get it to give it goes to what I was saying before. It's very easy to just integrate it to something and to sell that as a product, right? And in many ways, that's what the Humane AI pin feels like to me. They prototyped this form factor. Maybe they didn't figure out all the software to it yet, which is of course the second side of trouble to this. Is you need to develop the hardware, and then of course the software that's compatible with it. That maybe they figured, okay, we could just kind of out of the box ChatGPT everything, and then kind of just accelerate a quick path to some sort of launch, and then iterate from there over time. Could have maybe that was some of the logic. Like I don't know. But it to me definitely feels to me that they tried to shortcut the software.
But I think that the reason why Humane ended up not being as exciting as it could have been is because of ChatGPT. I mean, mainly because we saw something so revolutionary that this almost seemed like a wrapper built around it.
Yeah.
Do you agree with?
Yeah, I think so. I mean, for sure. I think if you would have beamed back 3 years in the past and shipped this product, it would have been a lot more impressive, because the sheer software competency would have been completely mind blowing. Right? But that's not the case anymore. Right? And so, again, I don't know about anything that they did in that regard is developed in-house. I probably doubt it, because, developing these things in-house is really hard in our research companies. So I'm not, again, I have no unique insight there. I'm just not particularly convinced that would be the case. The technical expectation of teams really early has gone up, right? Like it's never been easier to just kind of out of the box build like really, really powerful technical products than ever before, which, for early teams, I think actually decreases the technical risk they have going into a company. That places that risk into distribution, in my opinion, right? That's really the way that the game is actively changing on the back of these technical advancements. And that's just the reality of everything right now. So the same thing goes for Humane, right? I don't see anything from Humane that really gives me this idea of like, this is their vision of the future. Right? They want to build this thing because they're building to this like very drawn out, well illustrated view of the future of computing. And I think that's what's hurting them more than anything else, more than the fact that the device itself perhaps is a bit forgettable, I guess, for lack of a better word. But there just seems to be no missionary aspect to the company. And I think if you're going to be successful doing this kind of thing, to me, I feel like there's a very clear vision that you kind of trot out with. This is why we're doing this. This is the future that we see. And this is how we're building it. It might take us a while, but this is where we're going. I have no feeling of that at all with what Humane is doing. I think that, to me, really shows itself also how they present, how they talk about their device, right? Like, all feels pretty flat and like, a lot of open question marks and, what's the point of all of this? And I think that's probably one of the biggest driving factors in why they're getting the public reception that they are.
if we talk about building such long-term companies like Human, like Rabbit, we'll keep both of them aside. We'll see how it plays out. I personally, and I'll not be too snarky, but just come on, Human. So if we keep them aside, how should founders really build such long-term companies, um, where with new technology coming in between and like pivoting and playing according to that?
Yeah, I mean, it's hard. You do need to go, you need to have an idea about what is the addressable market now and how, and are we in a position where that's a target market that can just concentrically grow? Because of course, the reality right now is that for all these kinds of technologies, all of our assumptions that are in the space is that the market in of itself perhaps is not fully venture scaled today, but it will be, and because it's growing year over year, right? So basically this market will grow with these companies that by the time, for 10, 15 years in the future, the markets will be big enough to accommodate, companies that have that venture scale outcome that, of course, us as VCs are looking for. And that's what we're kind of investing in now, because we think that they're just going to grow with that, and that market's going to get there. And so I think on the flip side, the I don't know if you want to call it advice, but the way I would think about I think about it from a founder's perspective is very similar, right? Like, what are the stages I need to go through? What is the end goal that I need to go to? What is a very strategic way to make sure that I am growing at the pace more or less that I would need to grow to be on that trajectory, and pick markets accordingly. I don't think there's a wrong or right answer, other than you can vary in a very rooted way, kind of justify that you think that like that market is there. These markets are there today and are going to be there, and you're growing with. You're putting yourself in a position to be in a market that you can grow with, that will ultimately, on that trajectory, end up at accommodating a company of let's call it $1 billion company, but what you're trying to do. And that's not always easy. I think, for example, in VR, it's a bit easier right now because, like, for example, the Quest ecosystem is scaled to a level where developers can make 9 figures of revenue in a year today. And again, like, if you're saying, hey, that's the ceiling of where the ecosystem is now. I'm starting a company today, and, that market, again, is only growing, quite at significant margins year over year. We'll be in good shape, right, with where the current market stays. Where that one's a bit easier, right? Like, so it's just like, okay, within that market, are we tackling stuff where there's enough user base? So, for example, with Quest, it's going to be, you're probably in a good position if you're building for like Gen Alphas, Roblox generation, and that sort of thing. That's not always scientific. Nobody knows what the hell a market is going to look like in 3 years, right? Nobody. We have historical data. We have things we can assume that will cause certain things, but we're not, it's none of this stuff is necessarily predetermined. And so I think one of the realities of the founder trying to raise for something that's very frontier tech is either you need to convince people that market will be there, which I think is kind of the more difficult path, or you find partners that already have that predisposed belief in the markets that you're trying to go after, and you just really need to sell them that your solution is a good one for that.
With fundraising actually for such a long-term project, something that will take long-term to get to the market, how should the runway really go about for these kind of projects?
When it goes back to, like, I think it's really difficult. Like, again, they're always accepted, but like, kind of speaking in a very more like rudimentary way, it's extremely difficult to say, hey, give us money and we're going to have, we're just going to build this for the next 5 years. Hopefully it works, right? Like, that's, that all likelihood is not going to happen or not going to be funded. Which is why, even like I have passed, for example, even on companies in these spaces that I believe in, because I felt that their go-to-market strategy was not definite enough. And so this goes back to the point of, even if you have a grand vision, sometimes you have to start smaller, right? And there are a lot of, big companies, of course, that are born out of, much more, I would say, finite and small initial concepts, right? And that ultimately ended up becoming these kind of big, big conglomerates to some extent. They all started very, very small, and all started with solving very specific problems, right? And so I think even if you say, hey, we have this big view of the future that we want to build towards, what maybe today the ways to start to get us there is by building a platform for this particular constituency, that they'll buy, pay for today. And, some of the, for example, technical infrastructure gains that we're making from that, ultimately over time plays out to this like bigger vision. Like one example I'll give you is um, uh, one thing that I suspect will happen is, and I say this more not from my own first principles, or we're just talking from a lot of 3D developers in the VR space, where Unity and Unreal are the two big engines that a lot of people use to create content, that, these are not 3D native engines, and we're going to have something that's more native to 3D, right? That's just more accommodating like specific things we need for VR, AR. And so we're going to have an engine. Now, a lot of people, believe that will happen. And I think it's almost consensus at this point that's an opportunity. The point, though, is how do you approach that, right? And so there are two ways of looking at this and saying, hey, there might be somebody that builds the engine from the ground up and sells it and people start using it. The other alternative might be there's going to be an Epic Games kind of scenario with Unreal Engine, right? Because, Unreal Engine itself was something that was effectively platformed out of titles that Epic Games built, right? And they just realized, hey, wait a minute, we have something here, some tooling that's extremely valuable, which we can validate in the market. People want to use this, let's just sell it, right? And now they have one of the biggest engines in the world, right, from doing that. And so the question is, which way is it going to go? And so like the hunch right now is, if you look at the VR market, the market is probably too small for your entire business today to be selling engines. There's just not enough people building a lot of valuable content today. For that, VR primarily right now still has a content first. Like it just needs more compelling content right now, first and foremost, more than it needs infrastructure. So in my opinion, what's more likely to happen, and I already see some projects where I think there's some potential that this might actually happen, is where you get an Epic Games scenario, right? Where they started building a game, but in building their game, they realized, like, wait a minute, we're actually solving a few like very generic problems for VR development, game development. Long term, perhaps we aren't actually seeing on an engine here that we can platform out. So that would be a great example, right? Of saying like, hey, we're building an engine. Like our actual pitch is we're building an engine. But where the market is right now, the best way to start laying the groundwork for that engine is an infrastructure that we're building in content, right? But we're actually shipping content as kind of a product of our engine. And so our initial go-to-market is that title, right? That game. And, so like that would, for example, be like one, I think, just concrete manifestation of that, where, the end goal is a lot bigger, but the market's not ripe for it. And so you're taking a more, this is going to progress us forward as a business and start moving us towards that goal of the long term within the parameters of the current limitations of realities within the market that we're building.
If you talk about relief, fundraising for these projects, you have to figure out the environment. At the end, do you think it's all about incentives?
Well, I mean, the incentive is that I'm going to make a lot of money back, right, for my investors. It's effectively like is the main incentive for any investment. I mean, that's not even an incentive, right? That's like the job responsibility. Right? That I think is the first layer to this. The second layer to this is that this is more my kind of more my subjective view, but I do think it generally holds, is that I think every investment has a market price, right? And so a lot of times an investor might pass on you, not because, they theoretically are unwilling to take the risk that you're presenting them, but they're unwilling to take the risk in trade-off with the upside that they might get, right? So I always say there's a market equilibrium price for every company in terms of what their value is, and on the fundraising market, both in terms of value and how much they can raise, because they're usually kind of factors of each other. And so it's very often true that perhaps if you're doing something very, very frontier, that maybe the reason you're not raising money is because, you might be doing everything right, but you're charging too much for it. And so an investor might say, I like this, and I would do this, let's say, at a 5 post, but not at a 12 post, right? And so the ultimately comes down to like, what is your right price at the right point of time in the market? Which could be another thing, because I think a lot of people kill their companies by starting off on the wrong foot there, and not really giving themselves a chance to actually give it a go, because they're just, they're asking for prices that are ridiculous for other VCs that are not willing to take the price, that they're willing to take the risk of price action, my price.
Why do VCs care about the valuation that the company is raising?
Well, it's a multiples game, right? And I can talk specifically more about the business model that most pre-seed funds or early, like even seed funds have, which is mostly predicated on, we invest into a basket of companies. And, I think there's a lot of, I don't think you'll ever find anybody that will like universally agree on that this is right, this is the right strategy with one. But I think typically what you see is that, early funds that invest earlier will do more investments than, of course, later stage funds. And the idea is that, we have an idea of the kind of returns that we want to generate for our investors, right? Because you can keep in mind that the end to all of this is that it's a wealth compounding strategy for a lot of our investors, right? So ultimately, they want to have some idea that we have yes, there's risk, and they assume that, right? But we probabilistically have a model that will feasibly generate them, certain bounds of returns, at least at the minimum. And we need to do that for ourselves, so that's ultimately our job is, right? Our job is not to be charity, our job is to make money. And so what you're basically doing as an early stage fund is you're investing into a basket of companies, and really unequivocally your returns are being driven by extreme outlier exits. Where really, like, you need in your portfolio to invest in 50 companies, you probably want to have one or two companies that gave you 100x, 200x, something like that, right? Because if you do that, your LPs will make money. Yeah, there are certain ways you could optimize to make a little bit more money here or there, right? But like ultimately, like your big return is going to be driven by an outlier event like that. So what you're trying to do, of course, is to position yourself. And again, this is also a lot of just me talking about my own strategy from having done my own, I guess, research on this, or like my own thinking on this, and trying to find the right answer. Is you want to have the right trade-off of shots on goal to get those outliers, while also investing within parameters that give you a theoretical shot at hitting one of those outliers at any given investment. And so that's somewhere where, of course, that valuation becomes important, right? Again, a lot of investors might not believe in this. I can only speak for myself. Me and some of the people I work with do, that this is definitely true, where that outlier calculus changes if I invest in a bunch of companies at 25 posts versus 5 posts, for example, right? Like my business model fundamentally changes. Or not the business model, but the way to get to those end needs is the same, because all of a sudden, if I assume that, hey, I'm going to get an extreme outlier, let's say from a $3 billion exits or acquisition, let's say hypothetically, I know that that's my base assumption. I know that I probably need to invest in companies at this range to get, that at least 100x out of that deal if I count for dilution, all these sorts of things based on historical probabilistic data. And I'm probably not going to really get that if I just persistently invest in a different valuation tier, right? If I'm making the same assumption on the exit. So if I was doing that, I would probably need to rethink how I invest, right? Both at perhaps stage and check size, etc. And so it is a lot of these factors. And so, I think the earlier you are, and because at the early stage you are the earlier you are, the more you're reliant on these extreme outlier cases, right? And so you have to model for that. And so a big component to that, frankly, is just the entry price. It matters less, just as the counterpoint, it matters less, for example, if you're a big, let's say multi-billion-dollar, multi-stage fund that's more interested in where their model is more predicated, their returns model is more predicated on having very large equity stakes in very successful companies, right? So, for example, those kind of funds are able to enter later, let's say at the maybe late seed series A, right? Where you're already able to pick out, real kind of early winners in the market, like actually, and then just really bankroll them and fund them and have big ownership stakes in them by the time they exit, where, maybe like those funds only have to play for like a 10x, right? For their models, for the business model to work. They don't need a because they have so much money under management that they're able to just do more money on money investing. So those are just fundamentally different business models from like a pre-seed fund, which, has, let's say, call it less than $50 million under management. Let's just say, for the sake of argument, you're playing a different game because you're playing with different amount of assets. So that's why it might also change. So I think it's always important to say, like, the way Andreessen invests won't make sense for a fund that's $10 million, for example. Would it make sense for somebody like Andreessen, that has billions of dollars? And so that's something I think important to realize. Also, particularly when I think there are a lot of angels and stuff, I think of co-investor signal, those sorts of things. Like, doesn't always make sense because your strategy is not, and your business model is probably not always going to be the
same. If you talk about, I think the last part there, if you talk about co-investing, co-investing, I'll keep aside angels for now, but co-investing between VC funds for such an early technology. I mean, even though the augmentative era, in your opinion, has existed for a while now, but it has really started to gain market adoption sort of now, where the larger funds are starting to get interested into it.
Yep.
So
I think so.
At what point do you think will the co-investing turn into competing for deals as this technology grows?
It's still different, right? Because, like, for me, for example, having multi-billion-dollar conglomerate, like huge funds, I would say conglomerate, like multi-billion-dollar, multi-stage funds coming to the space is a good thing, right? Because for just, again, back to business model, for an Andreessen Horowitz, for example, like, I mean, yes, they obviously have, like, for example, Speedrun now, which I think is sort of addressing this a little bit, but if we're kind of taking a step back, if I have $1 billion under management, it doesn't make much sense for me. Or, there's very dubious question marks on tossing 100K into pre-seed, like, to waste time on that. Like, it's not really going to be the thing that drives my returns, right? It might buy me a call option for the round that I'm actually interested in. Downstream, right? Maybe the Series A or so, maybe with Series B. So realistically, for the most part, for guys like us that do pre-seed, the big downstream investors, we call them, like, are not actually competition for us, but they're actually validation and de-risking, right? Because for me, let's say I usually would put one of the first checks into an institutional for a company. If I know that at the next stage, so let's say the seed round, there's a lot more capital available for them than before, for me, that's a de-risking proposition, right? And that's also de-risking for my LPs. So I actually think it's a good thing. As far as the pre-seed goes, the kind of funny thing I think about pre-seed funds is that there's this reality almost that, pre-seed funds, I think, in nature are very collaborative because none of them are big enough to just really, like, write, or nor does it even make a lot of sense to just say, hey, I'm going to invest $1 million and just take this entire round for this company at pre-seed. It's like both, like, usually funds are too small at pre-seed to do that. Nor does it actually make a lot of sense. So in nature, it ends up being like, you have a few funds that work together on a round. Which also doesn't, it's not just limited to pre-seed, of course, happens to seed as well, right? And then, like, but if you end up getting into a position where, hey, I could do a $1.5 million check into a pre-seed round, just do the whole round, you're probably getting to a size where, like, you're actually better served being, like, more of a seed stage fund, right, kind of thing. And it gets you really start to walk that line, right? So, my experience pre-seed has always been a very kind of, like, collaborative stage at this point, right? Like, maybe again that could change as far as I know, but that's usually been the case. And again, those bigger funds coming in is really just going to be good for us, right? Because if I know, hey, it's not just Andreessen that's, like, potentially a big seed investor into one of our rounds, but it's also Lightspeed, Union Square, Coatue, Sequoia, whatever you want to name, right, in there. That's a good thing for us, right? And it's so I see it as all positive. Like, more money coming to the space, I think is going to be a good thing.
I think we did. I think one last question, one thing that I like to end with. I've been into startups and VC since I was like 11. What do you think is one fact that would blow 11-year-old in mind?
About VC or like general?
Anything.
Oh, I'm not that interesting to have. Okay, here's I'll do more of a life lesson. Well, maybe this is where I'm blowing your mind, but I think if at some point you realize everything is about people. And a lot of success in life has to do with people, right? And everything's a people business in the end of the day. And so I think that's something important to just kind of keep in mind. Like, when I was younger, I used to think it's a lot about hard skills and, being very good at something. Like, yes, that will help, right? But like ultimately, I think your success is very dictated by, people and all of that. So, that's just something I'll kind of put as a life lesson to 11-year-olds. It's, it's like people matter. Take it seriously. Everything is a people business, basically.
Yeah. Learned it.
Yeah.
Great.
Yeah, exactly.
But yeah, that blew 15-year-old me mind. I think that's it from my side. Anything you like?
No, I mean, it was fun. Great questions. I hope I didn't bore you to death, and there's some useful tidbits in there for you to use. But no, I like doing this. These are good questions. Like, happy to do it again anytime. And let me know I can be helpful all that moving forward. Great.
Yeah. Third time.
I'll do it at some point in the future. Like I'll like if you want me on again anytime.